US stock market seems to have edged higher since our last report, as all the three major US stock market indexes, Dow Jones, S&P 500 and Nasdaq, edged higher, yet the relative decisiveness to push them to a new all-time high levels seems to be lacking. In this report, we are to discuss some fundamental issues and continue to have a look at NVIDIA's stock split and Microsoft's movement, and finish off the report with a technical analysis of Dow Jones' daily chart. In the coming days, we get a number of financial data releases, which could have a bearing on the direction of US stock markets. We highlight the release of the US employment report for May with its NFP figure on Friday. The non-farm payrolls figure is expected to rise from 175K in April to 185K, while the unemployment rate and average earnings growth rate to remain unchanged. Overall, the forecasts tend to note a pause in the easing of the US unemployment market, if not a slight tightening given the expected rise of the NFP figure. Should the actual rates and figures meet their respective forecasts, we may see the release weighing on US stock markets, as the release may allow the Fed to maintain rates high for longer. Yet the uncertainty regarding the actual rates and figures is high, given that past releases had disproven forecasts a number of times, and given that the stakes are rather high, we may see volatility being on the rise at the time of the release. NVIDIA is to proceed with a stock split this week, and at the end of Friday's session, NVIDIA shareholders are expected to get an additional 9 shares for each share they hold. Hence, the stock split is to divide the value of the share by 10 in the following session. That would practically mean that NVIDIA's share price closed on Friday at around $1,170. It would open on Monday at around $117. On a technical level, the change does not make NVIDIA's shareholders any richer or poorer, as the drop of the shares price is to be compensated by the increase of the number of shares held by each shareholder. On a fundamental level, that would mean that the reduced price of NVIDIA's shares could make them far more attractive, and especially given the AI frenzy in US stock markets, could intensify demand for NVIDIA's shares in the long run. The release of the latest earnings report of Microsoft tended to highlight the shift of the company's focus towards AI. It was characteristic that Amy Hood, Microsoft Chief Financial Officer, stated that currently near-term AI demand is a bit higher than our available capacity. So it should be no surprise for the markets that the company cut hundreds of jobs from its Azure cloud business to support investment in AI, as per the email sent to employees. We expect the shift in the company's orientation towards AI to have a positive effect on the company's share price in the longer run, given also the market's focus on the sector as mentioned in the NVIDIA's comment as well. US 30 edged higher since our last report, breaking the 38,520 resistance line, now turned to support, yet the bullish tendencies for the index remain unconvincing for the time being. We note that the RSI indicator below our daily chart is nearing the reading of cutoff point of 50, yet remains still below it, which on the one hand tends to imply that the bearish sentiment is fading away, yet the bullish sentiment has still to evolve among the market participants. The 20 moving averages, which is also the median of the Bollinger Bands, seems to be flattening out, while the Bollinger Bands remain pretty wide, which could allow for the possibility of increased volatility. Overall, we tend to maintain a bias for a sideways motion, yet at the same time issue a warning for some bullish tendencies. For a bullish outlook, we would require the index to break the 39,300 resistance line and take aim for the 40,050 resistance base, which is practically an all-time high for the index. Should the R2 be broken, we set the 40,800 as the next possible target for the bulls. On the flip side, for a bearish outlook, we would require a clear break below our 38,520 support level, with the index aiming for the 37,770 support line. As this report concludes, we would like to thank you for being part of our financial updates. From all of us here at IronFX, we wish you a solid trading.